Hi everyone. I recently come across these notes on the internet. These are from Learn Signal. They're not from this year, but they're still good to practice. And as I said before, I've done a question, I practice a question on every single topic. And today I'm going to go through the review and reporting. So there are 4 questions in here, and we are going to go through these in a few minutes. First of all, before heading to the exam hall, you should have a clear layout in your head about the audit report, about the opinions. So please, in the exam, don't mix up if it asks a question about the audit report or the audit opinion, don't get these two mixed up because they're two different things. A simple layout of an unmodified report, as I said in here, is this one. Right, so if you have to include the key audit matters or if you have to include another information paragraph, remember that by including these two, for example, the report will not be modified like in this side, but will still remain unmodified report, and the opinion will still be unmodified. So remember this layout because you might get a question about this, as we can see by doing the questions later on. But please remember this layout. Okay, so if it asks for key audit matters or other information paragraph, then the report will still be unmodified report, unmodified opinion. If in the question you have to include a material uncertainty relating to going concern paragraph because the management gave notes in relation to the financial statements in relation to this matter, then you have to include the paragraph. As well as including emphasis on matter paragraph or other matter paragraph. So by including these paragraph in here, the audit report will become modified. So it will only become modified on these 3 will be included, but the opinion will still be unmodified because we're not talking about the opinion on the financial statements, whether they are true and fair, whether they are misstatement. We're talking about the report. So this is the layout of a simpler report. Remember the layout because it will be handy for you in the exam. You have this clear in your head. The examiner will ask about the what kind of opinion the auditor should give. Is this opinion given right? Should be a different opinion. You should have again this very much clear in your head because if you're going to go in the exam hall and you're just guessing, you're not sure of what is not, then you'll be you'll be having problems with this topic. When it comes to modified opinion, these are the types of opinion that can be, and this is a very good layout. To be honest, I've used this in both audit and assurance and in both advanced audit and assurance because I sat that exam. So first of all, the financial statements are materially misstatement. It could be misstated by 1 or 2, and when we say material misstatement, it is because when we calculate materiality, the threshold are these. So if it's 0.5 up to 1 of revenue, 1 up to 2 of and more of total assets, and if it's 5 or 10 of profit before tax percentage, then we consider material. Also remember, because this is part of this, also it can be material by nature. If we're talking about a director, even though there is no materiality to calculate in that case, but if we are talking about a director, then you should know that this is a related party transaction and is material by nature. When it says that is material and pervasive as a threshold, you should use, or you can use the 60%. If it's more than 60% of the that figure that is given, for example, if a figure is given and it's more than 60% of revenue or total asset or profit before tax, then this is material. You may not see this in the audit and assurance exam. You'll see this more often in the advanced audit and assurance, but it's good to know because if you put this down in the exam, you will get you'll get a 0.5, you get a marks by knowing more information about this. So remember this percentage. Also remember that by default, if the management refuses to give a representation letter, it will straight go in here. So every time you have in the question a disagreement between the management and the auditor about accounting standards, about what should be adjusted or what should not be adjusted or go on this side, because it's just about an accounting treatment, a disagreement. Does that not mean that the financial statements are as a whole mistake? There is a limitation on the scope of the work of the auditor, and this means that the auditor cannot find evidence about an issue, or is not led to see some evidence or financial statement, or you can't go in a warehouse, or you can't do that, or you can't do the other. This is called limitation on scope. So if it's about the limitation of scope, it's going to go on this side, and more likely it will be a disclaimer of opinion, because you just say, sorry, I can't give an opinion because I don't have access to all the materials, I don't have access to that or the other. So like I said, by having these layouts clear in your head, a reporting question would be, straightforward, piece of cake. So please remember these layouts before doing questions. I will upload this on my Google Drive so you can have this handy. And let's just start with the questions. Those questions that you can't find them anywhere, that are not, easily available on any revision kits or on the internet. Something that is different might be important, so always remember that. Now, if we start with the question, below is an extract from a draft audit report from Pizza Limited, has been experiencing some issues this year, and the extract below is the proposed opinion and the basis of opinion for the current financial year. There are two issues relating to one to a provision and the second one to a depreciation calculation. And the depreciation calculation has been misstated by 5 million and the provision by the same amount, and both are considered to be material. So in this case, it does not give you the amounts for the total asset or for the profit before tax. So it says that they are material, so you don't have to calculate anything. And if we look at the requirement, first of all, it asks what type of audit opinion is currently being adopted. So what type of audit opinion? We have to read the paragraph. So this is a normal layout of the opinion, and then with the basis of opinion after the opinion. If you see this basis of opinion in front of opinion and opinion after that, that is wrong. And so, for example, if we read this, we have audited the financial statements of Pizza Limited for the year ending. In our opinion, the financial statements do not give a true and fair view of the state of the company affairs and have not been prepared in accordance with the international accounting standards. This is due to a non-current asset misstatement and a provision omission. So you have a question later on asking about the shortcoming of the wording and information. And when reading the case scenario, you should also see that this bit in here should not be in here. This should be part of the explanation of the opinion. In the opinion, you just give the opinion that you think is necessary. In this case, what type of opinion is given? If it says that the financial statements do not give a true and fair view, it means that if we look at this layout, it means that financial statements are misstated. They concluded that the financial statements are misstated, so we are on this side, but they do not give a true and fair view. It does not use the word except for, which is used for the qualified opinion. Remember that. So when you use a qualified opinion, so when you modify the opinion and use a qualified opinion, use the term except for. But in this case, it says that the financial statements are so misstated, and in this case, the adverse opinion is given. If we look at the requirement B, explain whether or not this type of modification appropriate one for the specific circumstances. No, why? Because they have isolated these two issues. So they have two issues. They say this in the start, so you cannot say that all the financial statements are misstated when you just said in the introduction that you found these two problems, two issues in here. So the audit opinion should be qualified except for these two issues, and you explain this in the basis of opinion. What are the issues? So yes, this is the answer to the part B. It's a modified opinion, and the opinion is qualified and should say that except for these two matters that are identified in here, the financial statements do give a true and fair view. So this is wrong. If we look at the next requirement, it asks for identifying the shortcomings of the wording and information. So you should come up with 4 or 5. If they're well explained, that you can come up with 4 to grab the 8 marks. And before doing that, you can easily type on the internet and find the standard layout. Now I have this example from the Advanced Audit and Assurance, how the report should be written. And you know, it starts with opinion, with basis for opinion, and in here, in the opinion, the wording that was used in this case says that give a true and fair view of the state of the company affairs at the end of the 30 June, whatever, and the profit, end of the profit and comprehensive income, changes in equity and cash flow for the year end. You have to highlight all of these, because otherwise, if you mention just one of them, it will imply that the others are not free from material misstatement. And then if you look at this straight after opinion, it gives the basis for opinion, and it explains. So if you look at this, we conducted an audit in accordance with the international standards on auditing, ISA, as applicable in whatever. Always remember that in the basis of an opinion, you cannot use ISA or IAS or whatever. You should use the entire word, so international standards on auditing, because people who read the report, they don't know what ISA means. So then again, it says our responsibility under these standards are further described in auditor responsibilities. So you have to mention about the auditor responsibilities, and you explain the opinion that was given. We believe that the audit evidence we have obtained is sufficient and appropriate for the basis of our opinion. So in this case, the opinion is unmodified. No problem at all. So in this case, because the opinion was not modified, it does not explain the materiality, does not explain what was the issue. But if it was to be explained, it should be here, the explanation. This should be just the opinion given for the year ending. You have to put the year ending, and then here the explanation. If we look at our example in here, it says here an audit is an independent examination and certification of the financial statements for the year. Does not give the year end, which is wrong. And again, use the word certification, which is not appropriate, because as you know, the auditors are not checking 100% transaction of the financial statements. You cannot say with certainty that everything is good, that we will confirm that the financial statements are accurate. Again, you cannot confirm anything, because you're not checking all the transaction, you're not 100% sure. We also confirm the accuracy of the estimates and judgments made by the director. You can never confirm the accuracy of some estimates and judgments. You cannot confirm your own estimates of judgments. How can you confirm the estimates and judgments used by the management? So if you come up with 4 well-explained paragraphs, small paragraph sentences, you will be able to grab the marks. Also in the basis of opinion, should talk about the materiality, should talk about the of the reason for the adverse opinion, and as I said, type adverse opinion given on the internet, you'll find examples. You should talk about what is in the example given, but you should also say to the examiner what is missing. It's missing the materiality, it's missing the explanation of the reason for the adverse opinion, so and so on. If we look at the next requirement, which is a key audit matter, explain and define. So you should also remember that key audit matters is an explanation that the auditor did, an explanation of the accounting standards that were material and that were important during the audit. And if you look at this report, this why I've chosen this one, because if you look at this report, the key audit matters, it explains. So this is a real audit report. So key audit matters are those matters that in our professional judgment were of most significance in our audit of financial statements of the current period. These matters were addressed in the context of our audit and blah, blah, blah. So always when you include a key audit matter, you have to explain how they address that matter, because otherwise, if you don't put that, that's useless. You put the key audit matter in here, you explain what the auditor did, and so you drop the mark. If you put the key audit matters, which is this one here and which is for listed company, then the report will not be modified. If we move on now to the next questions, it asks about explain the difference between a hot and a cold review and the benefits of each one. You should remember that a hot review is a review of what work was done, a review of the financial statements just before the audit report is signed, because as you know, before the audit report is signed, there is a pre-clearance meeting with the management where they discuss the audit opinion, they discuss different matters. So that is a hard review. And what is the advantage that the auditor can review, can review all the information before the audit report is signed. If there is something that is not sure or is something that is need to be added, then that's the correct time. Now, a code review is a review that is taken place after the report is audit report is signed, and the advantage of this is that only after the report is signed you can actually see how the audit was taking place, how was supervision, direction, and all the quality control issues, ethical issues. You can review everything, but you can do that only after the report was signed. So these are benefits for both of these. If we look at this question, for each of the four situations above, comment on the suitability and or otherwise of the proposed audit report extract and suggest an alternative if appropriate. So you should read the paragraph, you should say what opinion was given, and you should say if that was appropriate or if something else is needed. But remember here, read the question carefully in the exam, because if you read this sentence in here, it says, in all cases, you should assume that no further adjustments are going to be made into the financial statements, because maybe in the exam you're not reading this part in here and you are going to start waffling about that the auditor should talk to management to adjust the financial statements, but the examiner said before that you should not assume that there are going to be adjustments. There are no adjustments to be done. So remember this part when we are going to go through these questions. So this is a review of the working papers before the audit report is going to be signed, and there are 4 examples in here. So the first one, the company has been experiencing difficulties with this computer system during the year. 2 months worth of sales records were lost and no alternative method of verification has been possible. The proposed audit opinion is, we are unable to form an opinion on the financial statements due to the loss of data that has occurred. So the management lost 2 months of sales, of transactions and records of sales because of the computer system, and the auditor concluded that we are unable to form. In this case, what is the opinion? So the question asks us to put down what is the opinion given given by the auditor. So what do you think is the opinion given? If you have a look at this scenario, I'm going to leave you 5 seconds just to have a think. What is the opinion that the auditor is currently given? So it says that we are unable to form an opinion on the financial statements due to the loss of data that has occurred. So what is the opinion given? It's a disclaimer. Unable to obtain sufficient and appropriate evidence, and they cannot just split that between material and not material. They take this as a whole and they say they're material and pervasive, so they give a disclaimer of opinion. But if you look at the scenario, if you think in real life, what will happen if a company loses 2 months of records? You cannot just destroy them by saying, oh, we can't give an opinion, disclaimer of opinion, because everyone is reading the auditor report and they're going to go down if you're saying this. You should say that in this case, because just 2 months were lost, you can actually do those figures by looking at the other month. If there are more than 6 months, then you'll probably give a disclaimer of opinion, because you cannot just give an opinion based on the information that you have. A more appropriate opinion will be a qualified opinion when you use the qualified except for. So if you look at this question, it says that the company has miscalculated the final inventory value of a major line of inventory. The miscalculation is for 200 and the total asset. So if you have a calculator next to you, please do the materiality. So I'm going to do this with you now. So 0.8 of total assets. If we look at the threshold in here that I have in this example, so 0.8, it has to be between 1 or 2, so it's not material, right? So first of all, we've calculated the materiality straight away, so we'll know it's not material misstatement. Let's see. The proposal or the opinion is that, except for the miscalculation of inventory, the financial statements give a true and fair view of the state of the company. So I'm going to give you 5 seconds. What opinion was given in this case? If you look at this layout in here, what opinion was given? What word they used? So they used except for. So in this case, they gave what? They gave a qualified opinion because they used the word except for. So like I said, in the exam questions, you expect a form like this where they give you the layout and you have to identify what opinion was given, or you have to give the opinion. So in this case, they modified the opinion, they gave a qualified opinion. But we've calculated that the financial statements are not materially misstated. So in this case, the opinion should not be modified at all. So we should say that the opinion given is wrong, and it should be an unmodified opinion in this case. So if you look at the next requirement, says that the company was sued by a customer for providing 40 products, and the legal advisors of the company thinks that they will be successful in defending the claim. No mention of the claim has been made in the financial statements. The claim is considered to be material, but is thought to be significant enough to affect the going concern status of the company. So it says in here that no mention of this claim has been made, so the claim will not be settled before the report is signed. So the proposed audit opinion in this case, in our opinion, the financial statements give a true and fair view of the state of the company affairs for the year. So I'm going to give you 5 seconds. What was the opinion given in this case? So the opinion was unmodified. Financial statements give a true and fair view, no issues they are saying. So in this case, don't get mixed up by saying that you have to modify the report by including a material uncertainty related to going concern, because in this case, you should know from theory you include this paragraph only when the management gives notes to the financial statement by saying what happened, and you include this paragraph and you explain by making reference to those notes. Look at those notes. This is the usual blah 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 blah. But in this case, it says that no mention of this claim has been made in the financial statements. So first of all, you should say in the answer that the opinion was unmodified, but the management included no mention of this in the financial statements. Therefore, the auditor should not include a paragraph named material uncertainty related to going concern. But in this case, because the claim is considered to be material but is thought to be significant enough to affect the going concern, management should include the note. But because they have not included this note, opinion should be qualified except for due to the omission of the disclosure, and put the explanation in the basis of opinion. And when doing these examples, please take time and do them slowly so you can understand them. Have a layout in front of you so you'll know where to go, and then you'll get this straight in your head. If we look at the next example, the company is a medium-sized manufacturing company. There were issues with the director of the company during the audit, and they refused to sign the letter of representation. The proposed audit opinion reads, in our opinion, the financial statements give a true and fair view of the state of the company affairs. An emphasis of order paragraph had been included on the basis of opinion section that refers to an uncertainty in relation. So in this case, management refused to give a letter of representation, which is an evidence. So by not having an evidence, the auditors gave a qualified opinion. They said that the opinion is not modified and everything is nice and good. They said in here, but that is wrong. And in addition to this, they included an emphasis on matter paragraph where they refer to the uncertainty in the issue. This paragraph is not used for this, and you should read the acknowledge of what should be included in this paragraph. But if we go back and look at the layout, so this is a limitation of the scope, because the management gives a representation letter that they refuse to give a representation letter about an issue. So we're on this we're on this side in here. Limitation on the scope, meaning that they want to hide something, they want to not give you access to something. Opinion should be this one, a disclaimer of opinion, because you don't have the evidence, you are unable to give an opinion. How can you give a qualified opinion when it's like this? You are unable to obtain sufficient appropriate audit evidence due to the missing of the letter of the representation, but you are going to go like this and give a qualified opinion, which is very wrong. So in this case, the opinion should be a disclaimer of opinion, and this one should be explained the circumstances and the basis of opinion. So like I said, remember, in the opinion, you just give the opinion, and in the basis of opinion, you explain what happened. It says that the company has produced an environmental report as part of the annual report from the year. As you know, at the year end, when the management issues the financial statement, they also issue environmental reports as part of those year end reports. It's not compulsory, but if they want, they can issue this one. So in this case, they've issued this one, and a statement in the environmental report says that 60 million was spent upon sustainability investigation during the year, but in the auditor work revealed that the actual expense was 6 million, which is the figure that is included in the financial statements. And the audit opinion, in view of this misstatement and the financial statements do not give a true and fair view of the state of the company affairs for the year. So they're not here by saying we are unable to obtain sufficient appropriate evidence to give one of these two opinions. They are here. The financial statements are misstated, and in their opinion, pervasive. So the audit opinion given was an adverse opinion. But in this case, if you have a question like this in the exam, you might be thinking, oh, first of all, you should discuss with management why they have 60 in the environmental report, and why do you see in the financial statements that the expense was for 6. Maybe it's just a, if you look at this, maybe it's just a typo. And if you discuss with management, they can review the information given in the environmental report and can change this one before the auditor report is signed. But in this case, as you see, they're saying to you that no further adjustments are going to be made, no discussion, no nothing. You have in front of you the fact. You have to take a decision. The opinion should not be modified at all, because it's in regards to the other information that is given as part of the annual report. So it's not part of the financial statements, it's other information given. And what you should do in this case, you should include another information paragraph in here in the auditor report, and you should explain that the information in the other information given by the management and the environmental report, because the environmental report is not part of the financial state that are audited by the auditor. This is part of the other information, and this is not something compulsory. This is something that the management wants to do, because they want their users, their readers, to see what the company is doing for the external environment. So just include this information here, other information, and explain the inconsistency between 60 and 6 from the reports at the year end. So it will not lead to a modified report, no, because this is the layout, which is this side. It's not this side, so to result in a modified report. So if we look at the next question, and here you have to define the going concern and the auditor responsibility in respect of the going concern. So you should know that the management are responsible for assessing the company ability to continue as a going concern, not the auditors. The auditors are they have to review that information, the notes that are given by the management to the financial statements, and whether the selection of that is appropriate or not. And the audit procedures in the German to the going concern status, you should know these, and you should do this by reading the scenario. If you look at this, describe the possible impact on the auditor report of governing the following circumstances. And this could be actually a question in the exam, so it's quite very good that I have them all here. So first of all, it says that the company is uncertain, and this uncertainty has been disclosed adequately in the financial statements. So the future of the company is uncertain. They have problems with the money, I don't know what, so, or legal claims or whatever. And the management knows that, and the management properly disclosed that in the financial statements. In this case, you should explain about both about the auditor report and the audit opinion. The opinion will not be modified. The opinion is unmodified opinion, but the report will be modified by including a material uncertainty related to going concern status of the company. So you should know this part in here. Again, a scenario where the future of the company is uncertain, but no disclosure had been made in the financial statements. So just think of this, in a logic way. The directors know that the future of the company is uncertain, but they don't want to disclose that. Why? The reason for the directors not disclosing this in financial statements can be asked as a single question in the exam, because they are afraid that the suppliers and customers are reading that information and they will stop providing goods in terms of suppliers or in terms of customer. They don't want to work with them because they're afraid that they don't, they won't get their orders in time. In terms of the directors, they might be afraid that the shareholders will hold them accountable. Um, so there are many situations why, many reasons of why the directors won't want to disclose this in the financial statements. But you should think from the point of view of the auditor, not the director in here. In this case, the directors, they know that they have uncertainty in relation to the going concern, but they don't want to put this note in the financial statements by saying that we have issues, but we are doing this and this to resolve these issues. So in this case, you can't put a material uncertainty related to going concern and make reference to that note by saying, we've included this paragraph and we make reference. You should read the notes that the directors are giving at the end of the financial statements. You can't do that because they gave no notes. So in this case, you should say except for in the grounds of the material misstatement, the financial statements gives and through a fair view. So remember this. So the directors, they don't want to put this. You give except for. You don't give adverse and you don't give disclaimer. Adverse opinion, you give except for. And the directors believe that the company will continue to trade, but the auditors does not agree. So as I said, when there is a disagreement, always remember, when there is a disagreement between the two parties, it will go on this side and it most likely will go as an adverse. The directors believe that the company will continue to trade, but the auditors does not agree. You should go straight to the adverse opinion because they just don't want to talk to you at all about this by including, by not included. They just go straight by saying we have no issues when in fact they do have issues, probably if the auditor says that. So an adverse opinion should be given. If we look at the next question concerning the cash flow forecast, define negative assurance and explain how this differs from the positive level of assurance that is normally given in a set of historic financial statements. You should know the difference between the negative and the positive assurance. When it's about negative assurance, don't think that is something that is minus, or just think that is a lower level of assurance, because these are given in the prospective financial information forecast, and you'll see this in AAA in the strategic professional exams. So when it talks about the forecasts, either their cash flow budgets, you cannot give a positive, reasonable level of assurance, because you're talking about things that are going to happen in the future, and there is a lot of degree of uncertainty, a lot of judgment. So you cannot just say that the level of assurance is reasonable. You give a negative level of assurance, which is low. When it comes to the historic financial information, you have the information in hand of you. You can say you're talking about facts. You're not guessing. You're not talking about estimates or judgments. So the level of assurance can be reasonable. So in this case, is positive. Remember these two differences because might be asked. These two terms because might be asked in the exam. So if we look at the next question, it asks 4 elements of an unmodified audit report, and for each explain why they are included. So this can be asked in the exam. It was asked before, so no issue here. Describe 4 elements of an unmodified audit report, and for each explain why they are included. And again, you should look at the simple auditor report. You should pick this up responsibility because you can remember these are easily to remember the responsibility of the management, the responsibility of the auditors, um, um, other information than the financial statements. So from this one, so the question asks for describe 4 elements of an unmodified audit report. Don't think of the modified. This is the trick. Unmodified audit report and explain why they are included. So if you look at this scenario, you pick 4 of these. You can actually pick title or addressee or opinion or basis of opinion. But it's also good to know something about the responsibilities of both parties, the auditor and the management. So you explain these one here. You're not talking about this one here. And if we look at the next example, it talks about the company that it gives the revenue, it gives the profit before tax, so you calculate materiality, and it says that a key customer with a receivable balance at the year end, which is this one, has been notified the company that are experiencing cash flow difficulties, and so they are unable to make any payments for the foreseeable future. The finance director has notified the auditor that he will write this balance off as a recoverable debt in the next year financial statement. So this is the year end, and the finance director thinks that he should write this off next year. And the question is explain whether or not the financial statements requires amendment. Now, what I did in the exam in both audit and assurance and AAA, I had a layout in front of me such as this. Now I took these notes from SBR exam because, as you know, an SBR exam is all about standards. So if we look at this, the layout of what is an adjusting event and what is not an adjusting event, and it's handy to have these in front of you when you're doing questions about events after the reporting period, and also to have these clear in your head. As I said, these are from SBR notes, but you can also put this down, split a blank paper in two and put this down, adjusting and non-adjusting. So in this case, bankruptcy of a company, or in this case, the customer is notifying the company that they have no money to pay in the foreseeable future. It is an adjusting event because it relates to a balance that existed at the year end. Because if you keep that balance in the financial statements, but you know that that customer won't pay that balance in the future, then the financial statements are materially misstatement. And what is important is that they says here that the audit is almost complete and the financial statements are due to be signed shortly. So in this case, the report is not signed. So you can review these figures because you might get a question like this, but the report is signed, so then you have no active duty to do in regards to this balance. But in this case, the financial statements for this year ending should be adjusted, and not what the finance director is saying that it should he will write off the balance in the next financial year, and describe the audit procedure should perform and conclusion required. So you should do the audit procedures based on the scenario, and you should know them by now. Now, this was quite a good exercise, like I said, and to summarize this, as I said, when it comes to reporting, you should have the layout about what is an audit report, what is a layout of a unmodified audit report, and with unmodified opinion with modified report, and you should have them clear in your head, both of these, so this one and this one, because like I said, I've used this layout for both audit and assurance and advanced audit and assurance. exam, and they were extremely helpful. I hope this exercise was useful to use, and I'll see you all in my next video.